Good afternoon. Good evening. How are you all? Good to see you. Good to see you.
Good afternoon.
Good afternoon.
We're gonna get everybody a couple minutes to get connected. We got a few people coming in here. Want to thank y'all for joining us this evening. I know we you are everybody can be a lot of different places. You decided to hang out with us on a Friday afternoon, so we're gonna make sure that we get y'all some good information. Got a couple more people. Go ahead and getting connected. See some familiar faces, some new faces. So good to see you. All of that good stuff. So if you don't know, or we haven't met before, my name is Cavanaugh Nweze. I am the founder of Nweze Financial Solutions, and we perform tax preparation and bookkeeping services and some business consulting. And I have my good friend and associate, and I guess we've been tag teaming on a few things for the last few years. Brendon Boyd. You want to do a brief introduction of yourself, Brendon?
Yeah, sure. For those who don't know me or aren't familiar with me, as Cavanaugh said, my name is Brendon Boyd. My company's called Tower Insurance and Financial Services. So as an agency, we have appointments with a variety of different insurance companies. A lot of these insurance companies have a focus in commercial insurance. And commercial insurance is a big, broad category with a lot of subcategories within it. So that's why we're going to dive into different topics today on this call. But I help business owners secure insurance pertaining to their business, specific to whatever industry they may be in. So that's kind of the long and short of what I do. I've been in the business for approaching 15 years as a licensed agent, and I just like helping people and like helping businesses.
Yeah, thank you, Brendon. And that's one of the reasons that Brendon and I connected. It was I told a couple of people, but it was a random occurrence. I was stuffing my face at a pizza place, and I decided to sit at the bar. I ran into one gentleman, and he was working. Let's see if we can put yourselves on mute as you come, please. All right, thank you. All right, but yeah, it was just a random occurrence. I was stuffing my face at a pizza bar, and started talking to a gentleman, and started talking about how I like to serve. And this gentleman decided to it was like, look, you need to meet Brendon. Met Brendon, and like I said, he had an event talking about succession planning. We're going to talk about that a little bit today as well, and we've been connecting ever since then. When our clients need help with insurance, the first place that I send them, or the only place that we send them, we look, you need to talk to Brendon, and he's been doing the same for the last few years. And when his clients need some tax preparation or some bookkeeping support, so it's an honor to be able to serve and to work with other professionals who like to serve as well. So we're gonna go ahead and get into it. So we decided to do this. We started this year. We were doing these monthly discussions, just giving the opportunity for business owners to get some solutions direct from the people who specialize in that particular area, rather than just taxes, because taxes is just a part of your business, and everybody we need to have that information. And a lot of times we hear about this information from somebody who had a bad experience, and we end up with the wrong information, rather than having the opportunity to really have a conversation with a professional. So we are changing the model. What we usually do is we'll do a presentation, and then I'll do a presentation, the counterparty will do a presentation, but we're going to turn this into a conversation. So I'm about to interview Brendon about business insurance, so it'll be cool. If you have any questions anytime, feel free to drop your questions throughout the chat. We're going to take a break, and then we're going to dive into your questions here in the chat. And then as you registered today, there were some people who dropped some, you had to answer some questions to start as well. So we use some of your answers, some of your comments to kind of guide the topics as we go through today. Okay. All right. You ready, Brendon?
I'm ready.
All right, cool. All right. So first thing, what is the bare minimum a business needs to be able to actually get business insurance?
You have to be actively in business. And that can vary to some degree because you have people that are in business, but it's strictly a side hustle. And sometimes a side hustle is insurable depending on the industry that side hustle falls in. But to answer your question concisely, you got to be in business. That's the bare minimum in order to obtain business insurance.
Got it. So is there ever, I know you talked about a side hustle, right? So is there ever, what does it mean to be too small for business insurance or may not need it? Is that a thing?
Yeah, it can be, because if it's a side hustle, or maybe it's not a side hustle, but your business is not booming, you're in the very early beginning stages of your business and you're not generating a lot of revenue, then sometimes, depending on the industry, the insurance costs could be so significant that you just simply can't afford it because you're not truly a full-time business operation. So you can be at a scale that's too small where you don't have significant revenues that can even be measured by the insurance company from a rating standpoint for them to even generate a price tag for what it costs to insure your business. That can't happen. It doesn't happen necessarily often because you got thousands of business classifications, or quote unquote SIC codes, as we call them, which is how the businesses are categorized. So you got thousands of them out there that it doesn't happen a lot, but you can be sometimes a bit too small for insurance, so to speak.
Got it. And just a little extra information, those SIC codes are like, it's a 6-digit code that each business falls in a particular category. So whatever your industry is, there is a SIC code for your industry. And you can go look that up. You can Google it at, I usually use NAICS. If you put that in, put NACE code, SIC code, then you should be able to search by your industry to see what that code is for you. Now, if you talk about the insurance ratings, Brendon, what would be that floor if you talk about the minimum to get those insurance ratings? What is a significant revenue to in the eyes of insurance companies?
Usually companies want to see you're generating at least 50,000 in annual revenues. And in some cases, you can have a company that comes to me where they're not generating those revenues just yet, but they have a contract on the table and they're about to. So we'll put the revenues at that minimum because that's necessary just for them to get out the gate in terms of insurance. Or they may not be at that revenue total now, but maybe they have left that 9 to 5 and now they're going to be full time with X, Y, and Z entrepreneur venture, and we just set them at that minimum. And eventually they eclipse that as time goes on, as they're in business longer and longer. But that's kind of a baseline of where we start at, because that's typically, depending on the industry now, that's going to generate a cost somewhere around $1,000, either a little bit below that or a little bit over that, in terms of what the cost of their insurance is going to be if we're talking just general liability insurance, for example, or some type of professional liability or some type of other type of liability insurance.
Got it. And just to be clear, when we talk about 50,000, we're talking about 50,000 annual revenue, right? And then that $1,000 in terms of cost, that's $1,000 in premium over the course of a year as well. Correct.
That's correct.
All right. And that's interesting that you say that, because I'm always conservative, and clients ask us, it's like, hey, Cavanaugh, when do I need a LLC? You know, what size do I usually do? And I usually tell them, I say, you know, I'm usually aiming for like right around 30,000-40,000 annually. Because, you know, a lot of people, that's somebody's annual salary, and we want to be able to protect your family and your personal assets, so you can sleep a little bit more comfortably at night. So
absolutely.
Yeah. Got it. Okay. So what about, when does it become a requirement? Should it be thought of as a requirement? And when would a business owner hit that threshold, if you will?
Unfortunately, business owners see it as a requirement when there's a certain contract at the table that they want to win, or they come up against a certain client or opportunity where they get hit with that question, hey, are you insured? And that's when the business owner sees it as required. I tell people it should be required by you as the business owner once you get to the point. Well, I'll put it this way: if you have a business, let's say it's a brick and mortar business, once you have people coming in and out the front door of your business, it should be required by you, right? Once you are actually handling or in custody or control of someone else's property, that's when it should be required by you, the business owner. Those are just a couple of examples of when it's time to get some insurance. If you're if you're dealing with somebody's money, like taxes, right? Even if you're not at the scale of Nweze Financial Solutions, but you're doing some taxes and you're handling people's money and tax returns, it's time for some insurance because you're dealing with people's money. And something can happen with people's money, people's property, people's injuries, et cetera, et cetera.
Got it. Okay, great. So thank you. And you so nice. I appreciate that. I received that, So let's talk about risk management. I know it's a term that's kind of thrown around. What is risk management? Can you break that down a little bit for us?
Risk management, in short, is you as the business owner either having protective devices, i.e. fire alarms, burglar alarms, or even having certain safety measures and protocols in place, like mats that prevent people from slipping and falling, just things that prevent accidents and injuries or property damage. Anything you're doing or actively or have from a policy standpoint can be considered risk management. For example, if you're a brick and mortar business and you have any type of property that's of any type of significant value to you, whether that's a $500 price tag or a $5,000 price tag or something greater than that, a risk management procedure or action step could be you making sure there's a lock and key securing that equipment, as well as maybe surveillance cameras, maybe a burglar alarm system, so on and so forth, because you're taking risk management steps to make sure the risk of theft does not impact your business and impact that property. So that's just an example. I mean, property is the most easiest example, but you also have other examples on the liability side regarding you preventing a claim from happening and a risk coming to life, per se, when someone's injured or someone's property is damaged as a result of the operations of your business. So that's probably the best way I can answer that question.
Got it. Now, in acquiring the policy, when say I come to you and I need insurance for my business, and I discuss these different protective and these risk management procedures that I have implemented in my business, does that make a difference in my in the cost of my premium or anything of that nature?
It typically makes a difference in two ways. It makes a difference in one way from an eligibility standpoint. There are some companies out here that if you have tangible goods or brick and mortar business that you want insured, and you're not even willing to put a surveillance and security alarm system in place to protect those things, that company may say, hey, we're not going to protect your things against theft because you don't even want to protect them against theft, right? So that's one way that it does matter if you have certain risk management measures in place. And then secondly, there can be discounts involved where you're getting applied a 5%, 10% discount in some cases because you have certain risk management protocols in place. And that even exists on the liability side. If you're a contractor of some sort and you take a certain measured approach to how you perform work on this person or that person's property, or you perform work from the standpoint of making sure there's a safe work environment, that there's not going to be any bystanders or third parties somehow physically injured as a result of your operations, well, the company may give you a lower premium because you actually take that kind of approach versus you being someone that has no risk management processes and procedures at all.
Mhm. Got it. Got it. And you said something that's important to me. You said discount. So I'm all for it.
Hey, who doesn't like to save money?
Yeah. That's right up my alley. So great. Okay. So as a business owner, how can we determine that a policy is a good fit for our business?
I think that determining whether it's a good fit or not has to be established on the front end, right? And that has to be established between you and the insurance professional in terms of them actually asking you the right questions. And that's on them. If they're not asking you any questions about your business, that should be a red flag to any business owner.
Mhm.
Because how can somebody that's not in your business, not in your field of work, tell you what you need from an insurance standpoint and they ain't ask you no questions?
Mhm.
So they need to be asking you questions. If they're a good insurance agent, they should know how to do that, right? So they need to be asking you good certain questions, right questions, and and that's really the gist of it. Because then when they present the proposal, they should be able to then point out on paper, this protects you in this way, this protects you in that way, so on and so forth, where now you see how the coverage is relevant because it pertains to your business in terms of what you need protection from, because they want to ask you the right questions on the front end, right? And now they're articulating how it applies to your day-to-day business operations. And then at that point, you look at the price and you can determine if this price is an affordable price, a reasonable price, or maybe it's not. Because the price is really the easy part. I tell people this all the time. You don't want to pay a price that you love for a coverage that you end up hating.
Mhm.
Because this person, again, didn't ask you no questions. And they just said, oh, you need some insurance. And they kind of know, especially if they've been in the business as long as me. I know how to sell somebody something that they're going to grab onto it price-wise. And it could be something that's not even worth the money that they're spending on it. Now, I don't take that approach. I have ethics. But there are agents out there that do that they'll sell you something knowing that it's priced great, that you're going to jump all over it. But the moment you have an issue or the moment something happens of any significance, they're like, oh, well, the policy is not good for that, or the policy was only going to last for this long, or it's always a kind of a bait
Something,
and
right?
switch type, kind of like a bait and switch type situation at the end of the outcome. So asking the right questions is key to somebody determining if this policy or that policy is the right fit.
Got it. So speaking of questions, it looked like we got one.
Okay.
Miss Kyle, you got a question for us?
Yes, I do have a question. I'm happy to be here.
Happy to
Um,
have you.
Let me start by saying I like what you just said, Brendon, on love. I rephrased it, love the policy, not the price. So that's the key takeaway for me
Yeah.
on that. But as we were talking about risk management, so my question is along the lines of if you're currently running your business from home, and you may have tax input on this, Cavanaugh and Brendon, you on the insurance side, when you're currently running your business out of your home, but you have, alarm system for your home, or, you have things of that nature, where does that fall under? Like, where does my policy coverage determine between me being, is it for my house or is it for my business? Or
Mm,
do I have to collaborate the two?
got it. Good question. What
Well, you want me to go first?
go ahead.
Okay. So on the, you have different components, right? So let's talk about it from a property standpoint. You have, say, a home office. A home office that can fall in two categories in terms of personal and business use, right? A home office. You may use your computer to do things business related, but you may use it also to do online shopping for your family, right? So that's one thing. You can sometimes look at endorsing your home office onto your existing home insurance policy or your renter's insurance policy if you're renting an apartment, right? Or renting a home. Now, that is going to kind of begin and end there from an office standpoint. Now, if you're a contractor, a lot of contractors work out of their home or their truck. Now, you may have, as a contractor, $10,000 worth of tools, real expensive tools. that you store in your garage or at home somewhere. And then you haul them in, you load them up in the truck on an as needed basis when there's a job to do. Now, if we're talking about tools and equipment of that sort, you need a commercial inland marine policy to insure those items, because your homeowner policy is not going to insure those items, because they're big ticket items. When you talk about power tools and all that type of stuff that a lot of contractors have. I mean, I've seen many cases over the years, contractors that had insurance on their tools and those that didn't. And the ones that had that stuff stolen and they didn't have no insurance, they learned a hard lesson that day, because that stuff is expensive when you're talking about all kinds of power tools, stuff I can't even pronounce, or you don't even know how to use, that I've gotten exposed to from these contractors and really gotten some knowledge of. So on the property side, that's how that would work if you're talking about a business that you run from home. On the liability side, you have to have commercial general liability insurance to get protected in that kind of way. Now, commercial general liability insurance, there's an eligibility component there that is very difficult, if not impossible, to get insurance from a general liability standpoint if you're running your business out of your home sometimes, especially if it's a type of business that requires foot traffic. Like I'll use an old example because I've seen this with my own eyes, got family members and stuff that are exhibit A examples. You're a hairstylist and you're running your business out of your kitchen, or out of your garage, or you're a barber. You're not going to be able to get general liability insurance or professional liability insurance for that scope of work, that type of work, if you're running it out of your home, because you need to be running that out of an actual hair salon or barbershop, right? So that's something where you kind of stuck like Chuck, as they say, if you're in that predicament running that type of business. But there are all kind of ways to get yourself insured, depending on what you're looking for. The starting point is really to call your insurance agent, ask those questions, or really make an appointment and then ask those questions, because that's a long conversation. That's not a transactional type of conversation. So that's where you start with in terms of really getting those questions addressed specific to your industry and business.
Got it. And thank you for that, Brendon. And Ms. Kyle, in regards to taxes, my explanation is far simpler, and why I have people like Brendon close to me, because when we talk about taxes, we just need the square footage or the direct expenses for that space. So if it's just the square footage of that space related to the rest of your home, then we can allocate your home expenses in terms of taxes to that. But in regards to what Brendon's saying, in terms of that liability, usually, and you have those large ticket items on it, that's far more detailed in regards to when we talk about home-based businesses and insuring your products. For us, or your tools. For us, we're just looking at what you purchased and what's being used for the purpose of the business, and not personal. And if there is some personal use, then we create a proportion and we split that expense. Okay. All right. And just to let everybody know, I'm not the only one here that can ask Brendon some questions today. So if you have any questions, drop them in the chat. We want to make sure that we get everybody taken care of and get all the information that we need. And so just let me know. We can keep this going. I'm an accountant, but I'm easy. I'm flexible when it comes to interaction. Now, when we talk about those rules, we got some things that we got to attend to when it comes to the numbers. But in terms of interaction, just let me know. So Brendon, my next question is, how can we maximize these benefits of this insurance coverage?
Maximizing the benefits, I would say, always first considering the broadest form of coverage. Now, when people hear that, they're like, man, that sounds expensive. It may be, it may not be. Mm-hmm. But that's why I say start there considering it, because the price is the easiest part. Rarely have I met anybody that bought something and they didn't know what they paid for it, or somebody gave their card or gave their checking account information and then they didn't even know what they're expected to be charged with. So the price is the easy part. You can always say no thanks, or you can always say, hey, can we scale that back? Now that I know I can get the Cadillac option Okay, what does the Toyota Prius option look like? What is the price of that? I mean, it's a question worth asking, right? But sometimes people will opt for the Toyota Prius option first, which means they're not maximizing their insurance benefits because they're choosing the very basic option, which is the cheapest option. But they may be surprised that if you step it up a notch or step it up 2 levels, well, that might have been very affordable for you too. And there may have been some benefits to it that you're like, oh, wow, that's worth paying for now that I'm aware of it. But always exploring the options is how you make sure you're getting max benefit to whatever you're buying insurance wise, because usually you're paying pennies on the dollar for what the coverage is offering you, which is what you want.
Got it. So what that sounds like to me is you're saying don't walk into that appointment with a scarcity mindset. You know, think about try to find out what is the most that you can get, how much that gives you, and how much it actually costs you, and then kind of work your way into a middle ground to where you can meet both, where you can afford it and it covers you as much as possible. Sound about right?
Yeah, absolutely. Yeah, the scarcity mindset. It's funny you mentioned that because I got a call from somebody today, and they told me what they were looking to pay. And they told me they had a quote from somebody else at, X number of dollars. And I said, hey, man, you need to call that person back. I don't have no price like that.
Got it.
Now, the other thing I told them, just as an FYI, so they could read between the lines, I said, now make sure you have what you think you have before all is said and done when you do business with whoever they were talking about they got this number from.
Got it.
I'm thinking of myself already knowing that sounds too good to be true. That number was out of this world in terms of what he told me. But hey, I wasn't gonna call the man.
Yeah, I got it.
So I was like, if that's what the person told you, okay, I'll believe it.
Funny. Already. So now, what we talked about getting that maximum benefit, and you started talking about start at the broadest coverage that you can think about. So what are some common types of business insurance? What are some when you're talking to some of those most common items?
The most 2 common ones are a BOP, BOP, stands for business owner policy.
Okay.
And that's going to be a broad form of coverage. And that type of policy doesn't apply to every business and industry, right? But let's say your average brick and mortar business, is going to fit within a BOP usually. And that BOP is going to have a combination of property coverage and general liability coverage all in one. And then there's going to be some other auxiliary coverages within that. And a person is getting that all for one price tag, which is what makes it cost effective, because you're getting all this coverage for one price tag versus having to buy it as a la carte type of setup. Because we all know if you go to a menu and it's a la carte where you're paying this amount for the steak, you're paying this amount for the broccoli, you're paying this amount for the potatoes, and you're paying this much for the wine, right? Versus if you go to your average family dining place, they have a combination where you're going to get this and 2 sides, and then you got to pay $1.29 for the soda, something like that, right?
Got it.
So the BOP is more of that combo meal where you're getting everything within one price tag. And then you have standalone policies. You have a standalone general liability policy, which is most commonly used for contractors, because again, those guys and gals are usually working out of their house. So they don't have a property need because they don't have a brick and mortar storefront. And then you also have standalone property policies, because you have certain industries out here where their property side from an exposure standpoint is just a simple office. But the general liability side is a lot more complex, where they're actually manufacturing metal pipeline valves. And that metal pipeline valve that they manufacture is something that has a high risk exposure to it, that it won't fit on a BOP from an eligibility standpoint. So they have to buy everything a la carte if you're in that type of industry. But you got standalone general liability, standalone commercial property, and then you have a BOP, a business owner policy. Those are the 3 forms of insurance that you typically see for the average small business.
Got it. Wow. Couldn't say I knew had the words to say it, which again goes to why I sent all those questions to Brendon. Okay. And so, like I said, if anybody has questions, please let us know. We will make sure that we get the answers to your questions taken care of. So just to recap what you were just saying, Brendon, the business owner policy, that's your bundle. That's like direct TV telling me I can get cable, internet, and
Yes.
phone in one. All
Yes.
right. And then the standalone, that's for the home-based businesses, correct?
No. Typically, standalones most commonly are your contractors, your plumber, your electrician, HVAC guy.
So it's like the specialty contractor or some
Right.
sort.
Right. Yeah.
Gotcha.
They typically are buying general liability policies. Sometimes they need a BOP because they actually do have a brick and mortar office location at some point in the future sometimes.
Got it. Okay. All right. Thank you for that. All right. So Ms. Kyle, you got a question for us? What's going on?
Just for clarity, so there's a BOP, a standalone, and a standalone property policy.
Correct.
All
Correct.
right. All right. That's all.
All right, appreciate it. No worries. All right. So we're gonna keep on moving along here. So what I want to talk about, so we had a couple of in the questions that we put out for that people answered as they started to RSVP or reserve, for today. We talked about people put in some concerns or what they thought was their largest risk. So what I see in a couple of answers is risk of injury or risk of injury in participating in that particular event or on their premises. So in that particular situation, what would you recommend?
Well, if it's the possibility of injury on their business premises, then you want to mitigate that risk by eliminating any type of slip and fall or trip and fall hazards.
And that's what we talk about, the risk management, what we were talking about a little earlier.
Right.
Okay.
Right. So that may be having a mat inside the doorway so that when people come in with wet shoes and boots, they're not tracking that inside, causing the next person to come behind them and fall, right? So that's an easy example. Or when it comes to injuries away from your actual premise of the premise of your business, then you want to have maybe certain signage available, asking people not to walk over here or not to come in this area because it's dangerous and you have this hazard or that hazard, right? Or you just want to have any participants that's involved adhering to certain safety measures so that they don't injure themselves, right? That's the two best ways to handle and mitigate safety and injuries if you're talking about something away from your actual business. And then if you're talking about property damage, if there's if the liability, what's the word? How am I going to say this? To prevent you being liable for the damage of property of others, when you're talking about property damage, you just want to have an approach to your business, even have it written down on paper where you handle from a care and custody standpoint somebody's property with care in a delicate fashion, or whatever work you're doing does not further damage it because you're not getting out of your depth or getting outside of what you do as a core competence. I see that a lot with certain contractors where they do these 2 or 3 things very well. And then this person throws a bunch of money at them and says, I want you to do that 4th thing over there for me because you already here took care of this. And that person knows they don't do that. But they like, I'm not going to turn it down this $5,000. And they try to take on that task, mess something up. And now that person unhappy with them. They want their $5,000 back. And they're like, I'm gonna sue you if you don't fix this. And, just that type of stuff happens. So you can prevent that from a property damage standpoint, liability standpoint, by just saying no to that. That's another way to mitigate risk is staying within your core competence. Because that's what insurance companies are evaluating in a lot of respects is what is your core competence, particular to your business and industry. Because a restaurant owner, he don't know like you know pertaining to taxes.
Mhm.
And I'm sure a restaurant owner knows more about cooking food and running the kitchen more than you. That's
Yeah,
just
I'm
the
not gonna
nature of
jump in
things.
nobody's kitchen except for my own, man.
Yeah, yeah, that's just the natural way of things.
Oh,
That's why
really?
we have an ecosystem with different specialties and expertise.
Hmm. Hmm. Got it. Got it. So it's a combination of risk mitigation and staying in your core competencies.
Yeah.
And then what I also hear is like warning people, if you will.
Mhm.
Like saying like, hey, this is a risk. We're gonna do everything that we can to make sure that you're safe, but I need you to know that this is a possibility. Does that make sense?
Yeah, yeah. Waiver forms. That's
Okay.
that's another way to mitigate risk because even though it won't stop somebody from suing you or taking you to court, it can work in your favor. And I'm not gonna go with so far because I'm not an attorney. It can
Mhm.
work in your favor in terms of limiting the liability that you actually are found liable for per se, because this
Gotcha.
person did sign a waiver, which means they had a certain amount of awareness and not previous knowledge about what they was getting themselves into.
Got it. And so what also comes to mind when you said waiver is sometimes you have those you have the like the signs, right?
Mhm.
Sometimes I see them, it might be like a release of your image, like they might be having some cameras or
Yeah.
pictures taken on, but I also see signs. What comes to mind, I like to skate, right? So
Yeah.
at the skating rink, on almost every wall that they got on the skating rink, they're gonna have a mural, and on the side of this mural is gonna say skate at your own risk. It might say skate at your own risk as a mural.
Yeah. Yeah.
But is that the same? Does that suffice?
Right. That's a good job by that skate rink
Gotcha.
because they're sending a clear message to all the participants. So if you get out there and you sprain an ankle or break a wrist or something falling, you have forewarning that could happen.
Yeah.
Those things are unfortunate, but that type of stuff can happen.
And it protects the business owner and the
Right.
property and the assets of the business.
Yeah, because risk management, you want to eliminate risk or limit risk. And when I say limit risk, limit what the other party is going to get out of pocket from your business or from
Mhm.
your insurance company. Because a lot of insurance companies, well, not a lot, but pretty much all insurance companies, they know they're going to have to pay based on a certain set of circumstances. But they know that if there's certain risk management or mitigation things in place by the business owners, that limits how much they have to pay, which means they don't have to charge you as much insurance and
Mhm.
premium. They don't have to charge you as much money in premium for your insurance because they know you're taking some precautions as a business owner in terms of how you run your business.
Got it. Got it. Okay. Okay. All right. So another risk that some of our participants put in here is well, I think we talked about events. What about inventory
Inventory.
and making sure that your inventory is protected? Are there policies specific for inventory? Or how does that
Um,
work?
when it comes to insurance and inventory, there's two things that usually stand out. One is the protection of the inventory against theft, right? So we talked about that earlier.
That's the
Surveillance cameras.
mitigation, right?
Right, exactly.
I done learned the new vocabulary words, so I'm using them all the time. But go ahead.
Yeah, yeah. So you got, a protection from theft, surveillance cameras, burglar alarms, so on and so forth, right? That's one thing. But on the liability side, there's a risk management approach that you want to take, especially if you're in the distribution business, where your inventory is what you distribute, of course, but you have a supplier, a manufacturer. Is a lot of questions that the insurance companies ask distributors is, do you relabel the product before it's in the hands of the consumer or before it goes out your doors? If so, do you have a additional insured status from your vendor? I mean, from your supplier as a vendor, which allows their insurance as the supplier manufacturer to cover you, assuming you have not altered the product before it gets out your doors as a distributor. Right?
Outside of the label.
Right, exactly.
Okay.
Because if you put your label on it as a distributor, well, now this inventory you've accepted liability pertaining to it to some degree if it has any defects on it. So that can be a big deal and not a big deal depending on the inventory and the actual product for sale. You know what I mean? But inventory, if you're a distributor and the type of product you're distributing, there's a property damage. There's a liability component to it, basically. So it's not just about securing property from being stolen, but making sure that the inventory you have is not going to cause a general liability suit for you down the road.
Got it. Okay. So now we talked about, you touched on it a little bit before, but I want to kind of revisit it. So we talked about like home-based businesses and the insurance, and you also kind of spoke about like the barber and the stylist. But nowadays we have a little bit more, robust. Well, there are others, home-based businesses that because like that becomes an actual facility. So I know a friend, a client, all of that, who is on here and has absolutely great coffee, is a coffee roaster. But now we talking about some expensive equipment, Now, what does that look like if someone converts a room, a portion of a home, something of that nature into this facility like space? How do we talk about protecting that?
Well, that's going to fall, like we talked about NAIC codes and class codes and SIC codes, right? That's going to fall within your restaurant/beverage category, right?
Okay.
Most insurance companies, not all, but most insurance companies require that you be operating out of a commercial space, not out of your home, right? So that person is going to have to make a decision. When is it time to lease space at a business, at a facility, right? Because there's an expense to that. So you obviously got to be generating enough revenue to meet that expense, right? They have to determine that part for themselves. Now, they would have to find a company that is okay with them operating out of their home. And then that company is going to want to know things. Do you deliver your product to your customer? Or do you maybe have it for sale at a retail location that the customers buy it there? They don't actually come to your residence and buy the coffee? Because if they come to your residence and buy the company, that's going to be something that a lot of insurance companies are not comfortable with. Anything, again, that's foot traffic related or involves foot traffic of the consumer coming to your home to make the purchase transaction, they don't typically like that, right? Now, the one thing that probably they can do with not too much red tape to cut through is if they have heavy duty expensive equipment, they may be able to get a commercial inland marine on that equipment, even though that equipment is housed in their home or in their garage or in a spare room or whatever it may be. You know what I mean? So they can typically get insurance in that realm, in that kind of way, rather pretty more easily. But there's other components that make it difficult for a home-based business that falls in that restaurant beverage classification. It's difficult for them to get insurance if they're operating out of their home. Insurance companies are not necessarily the most, open-minded, innovative type of folks. So even though everybody on the call can appreciate somebody making a way for themselves with this business and this venture by working out of their home, the insurance companies, they're always thinking about worst case scenario with everything. So they're always going to see it that way first before they come to see it another kind of way. And that's unfortunate, but that's the way it is sometimes.
So, and this is an idea. Like I said, I can be kind of creative. And when we come talking about some of these regulations, not with the numbers, but when we talk about regulations. So knowing that here in in Houston, Harris County, we don't really have zoning, right? So what would it look like if if that particular property, which might happen to be what would look like a home, what if that property was in their business name, or in the name of their business or their company or something like that of that nature? Does that make a difference? With that?
You mean if the house is owned by the LLC?
Yeah, by the business entity.
Well,
This is just an idea that kind of came up, and that
well,
because like in my neighborhood, like honestly, I got warehouses, a couple of some small warehouses a few blocks away from me, right?
mm,
Which would entail commercial property. So what would make that different from my home or house that's really just an address and a building?
mhm.
And if it's owned by my company, does that make it a commercial property? Or is there something else that would need to be?
Not necessarily. It's going to depend on two things. The first thing it's going to depend on is if there is a question on the insurance application that asks specifically, is this place of business a home or a single family dwelling? You know, they'll get at that type of information in one way or another. If that question is present, it may not be there, it may be there, right? So if this is actually your home where you lay your head and sleep every day, but you have the home owned in the name of an LLC, then that question can be problematic, because if they see, yes, that this is also a residence, not just a business location or facility, that could make that person ineligible in that regard, if that question is present. Now, if the question is never asked, you don't ever answer questions that aren't asked, right? So you don't have to go down that road in that respect. Now, secondly, you do have underwriters that that are the people that are reviewing and evaluating the applications as they come in, because they don't necessarily take the agent on face value in terms of what I tell them about a certain business. They almost been turned into a little bit of like FBI investigators to some degree. Like some of them, serious. They didn't came back at me with some stuff where I'm like, dang, I didn't think they was gonna find that out.
Got it.
You know what I mean? Because I knew it was like an area of gray that it wasn't a direct question pertaining to that. So I wasn't worried about that from an ethical standpoint, but I knew that this particular thing was in an area of gray. So it wasn't right or wrong. It just was in an area of gray. So that underwriter may catch that, where they look up the address. They like, how this doesn't sound like a industrial complex. This doesn't sound like a storefront, you know. So they'll look it up on Google, and we know Google Maps, that'll show you
show the picture, show what's in the
exactly,
driveway and
exactly.
everything.
And the underwriters know that me as the agent, I'm always going to fight for the client, you know. So they'll send me a screenshot of the photo of the business.
Address.
That's a house, so that they know I can't say nothing now. I can't say no, it's not a house. No, you got the wrong one. They'll send you the photo. I mean, they're pretty clever. So it's really those two things. Again, if the question is on the application, and if the underwriter does some extra digging.
Got it. Okay. Got it. So, all right. So now what, one of the things, like I said, when we first touched bases, you were talking about succession planning.
Yeah.
So
yeah.
Can you give us a little bit information of what that is, and how does it take place?
Well, succession planning is moving the ownership of the business from one person to another person. That person may be your business partner that is going to continue on once you retire and phase yourself out of the business, or the succession plan may be a matter of it's a family business and your son or daughter is going to take over for the parents, right? The key to a succession plan is, one, the legal component, having a buy-sell agreement in place. I don't care if the people involved are family. You need to have a buy-sell agreement in place. You need to have an organizing agreement where it shows on paper the shares of ownership amongst the family members, right? So you got to start there and having the buy-sell agreement in place, so that if something happens to someone, the buy-sell agreement is going to say exactly what's supposed to happen next from an ownership standpoint, right? Where business life insurance comes in place is that's the funding for your succession plan. Because if If me and you, Cavanaugh, own a business, and let's say I got hit by a truck yesterday, and my 50% of the business is worth $100,000, and we sign a buy-sell agreement, and the buy-sell agreement spells out in plain English that you have to buy my share of the business at market value. Well, that's what you have to do because it was a buy-sell agreement signed by both of us, right? Well, now the question is, do you have $100,000? Maybe you have $100,000 in investments and savings, maybe not. Maybe there is other capital that you can use, but that's rolling the dice in a lot of ways if you're talking about being fiscally responsible per se in that type of circumstance. So risk management or risk mitigation says, let's fund the buy-sell agreement by life insurance, business life on each partner so that the business owns $100,000 policy on my head and $100,000 policy on your head. So if anything happens to either one of us, boom, the 100,000 is coming. And now you have paid that 100,000 to the business, and the business buy-sell agreement obviously spells out that the business now has to give that to the surviving family or the estate. And now you get the business shares in exchange for them getting the money. And now you move on, complete control, ownership of the business. And the succession plan has been executed in that respect. And that's just one example. You have to do the same thing, even if you're talking about a father and son that are in business together, or a mother and daughter that are in business together, because something may happen to dad, and now the son or daughter that was next in line, they got to take over the business. You know what I mean? And the business is going to need capital to do that, whether it be from the standpoint of funding the buy-sell agreement or from the standpoint of injecting capital into the business. Because if dad was the face of the, you know what, I'll use a classic example. I don't know these people, but everybody's seen them on TV. Again, I don't know this family. I don't know them at all. But everybody knows, what's his name? Mattress Mac, right?
Yes.
Gallery Furniture.
Mm-hmm.
Now, again, I don't know these people at all. I don't know anything about their business affairs.
This is only an example.
Exactly, only example.
That's my disclaimer for my risk mitigation, Brendon.
Right. Now I know now I know that his daughters are involved in the business because they be on some of the commercials, right?
Mm-hmm.
But dad is the face of that company, even though he's 80 something years old or whatever. And I'm willing to bet that if something happened to him today, there's going to be a impact on their bottom line, a negative impact on their bottom line now that he's gone. Because with all the charity work and the face and the reputation he has all around Houston and the state of Texas, there's people that buy from there because of him. Now, if he's gone, they may not buy from there, right? So they better have a policy on him from a succession plan standpoint, because they're going to need to inject that business with cash. Or if they don't, they're going to be forced to sell it, and very possibly. Because again, I don't know those people. I don't know how much his daughters know about the day-to-day business of that furniture store. I have no idea. Gotcha. But I know that he plays a key role just in face only, at least. So that's just an example of where a succession plan is definitely needed. And they make enough money, and they've been in business long enough that they probably have that stuff in order, I'm hoping.
I would hope so.
But that will be a classic example of a succession plan that is at some point going to need to be executed, because he's not going to live forever. He's an elderly man.
Got it. All right. So we got a few more minutes. Miss Cox,
raise their hand.
Yeah, I see. Miss Cox, come on.
Okay, quick question. You said a buy-sell agreement, and then you said something else about showing percentage of ownership. What was that called?
Organizing agreement. It typically lays out the stakes of ownership amongst the partners in that business.
Got it. Go ahead, Cavanaugh. Thank you.
All right. I really appreciate it. All right. So a couple of other things that I wanted to cover or at least do. Number one is we've had the conversation before. So I would say how can you explain to us in 60 seconds or 2 minutes, if you will, about business income insurance?
Okay, business income insurance, that's a part of your commercial property protection, either within the BOP or if you have a standalone commercial property policy. So that business income protection is meant to compensate the business and pay its net expenses. So for example, I'm gonna use a restaurant because that's probably the simplest example to use. You have a restaurant that catches on fire, burns down. Hopefully they have coverage on the business, on the building, or on their space that they leased to replace all the things that were burned up in the fire, or replace the entire building inside and out that was burned up in the fire, right? That part of their insurance is going to take care of that. However, while the repairs are happening, they're not in business. They're not making money, right? There's no customers walking through the door. And that process of rebuilding their restaurant could be, 8 weeks, 8 months, or a year and a half. I don't know. I've seen all kinds of different scenarios play out. So the business income coverage can compensate them for their net expenses and get them by financially while they have no customers coming in the front doors of that business while the repairs are being made. But business income coverage is not something that you can buy by itself. It has to be attached as a coverage within your BOP or within the commercial property policy. I've had people that thought that they could just, buy the business income coverage without buying the commercial property or BOP policy itself.
Got it. Okay, thank you. All right, so we got our last few minutes, and I wanted to do something very different. Well, Brendon, thank you off top
welcome.
for all of the great information today. Thank you to all who
Thank you for the invite.
Yeah, no problem, man. No problem. We gotta do it again, man. Like I said, because this is definitely something different, because we usually I'll do a presentation, somebody else will do a presentation, and we do some questions. But I like this. Just in planning, we were having this conversation. I'm like, yeah, we're gonna make this a conversation. We're gonna make it a little bit more interactive. So yeah. I'm glad to see how it worked out for us today. So I got something special. I don't even know what to name it. So what I'm gonna do is I wrote down some different industries or some different side hustles, whatever it is, that people do, for a business to start their businesses, or to, it's the pandemic, people working from home more, all of those things. We are here trying to survive one way or another. So I guess we're gonna call it survival tactics. And so I'm gonna list either the industry or the trade, the type of business it is. And what I would like you to do is, since we already kind of talked about some of those common policies, I would want you to say, okay, what type of policy that you think this particular business needs.
Okay. All right.
Make sense?
Yeah.
All right, cool. All right, so let's start. So an event planner.
An event planner, they need event liability insurance, or they need commercial general liability insurance. It really depends on how many events in a calendar year they plan.
Gotcha. What about an Uber driver?
An Uber driver, they need to do a rideshare endorsement on their personal auto policy.
Okay.
Catering, they need general liability insurance.
Okay. A massage therapist.
They need professional liability insurance. They only need general liability insurance. They need actually both. And oftentimes they can buy both in one policy, because they have they fall on two sides of the same fence, basically, I guess is one way to put it. Yeah.
Real estate agent.
They need professional liability insurance.
What about a wholesaler of real estate?
That's an interesting one, because a wholesaler, they're not a professional in the technical sense of the word. Wholesaler, that's kind of a term that was adopted over time. So it really depends on their involvement in the ownership and the sale of the property, what type of insurance they need. They may not need insurance specific to their profession, because they don't have a license of any sort to be a wholesaler, so there's no professional liability insurance they can buy. They kind of operate in a gray area as a wholesaler, which could be good and bad depending on how you look at it.
Gotcha. What about Turo rental cars? Somebody renting their vehicles on these new platforms.
They need commercial auto insurance, but that's going to be very difficult to buy if you're in the business of Turo. I had that conversation with a gentleman, and he had been calling place after place, and he finally got to my name on the list. We actually had a good conversation because I was the first agent he talked to that knew what the hell Turo was, because it's something that's fairly new. So that's something that the insurance industry hasn't caught up with. But my understanding is that through Turo, you can buy the insurance you need for that type of business.
Your vehicle. Okay.
Yeah.
Okay. Nonprofit organization.
They're going to need the same type of insurance that a business needs. It just is going to be very customized to what type of nonprofit work they do.
Okay. A builder or a construction company.
Oh, they're going to need general liability insurance, definitely.
Got it. Let's say a pop-up shop vendor.
They typically need event liability insurance. They'll need commercial inland marine coverage for the property that they own and move around. Those are not easy to insure because you have property and sometimes high-end items that are always on the move, because a pop-up shop is not a brick and mortar store that's there 365 in the same spot, you know?
Got it. Okay. So I got more here, but I want to be respectful of everybody's time. I know we're a couple minutes over. Brendon, again, I want to thank you.
Thank you.
So yeah, no problem. As you can see, if you need anything commercial, business, insurance, you name it, please reach out to Brendon. And he'll get you squared away. He not only will he get you squared away, and I can tell you, as myself personally, he helps us here in our business, and we have referred many clients to him, and we receive rave reviews. So thank you, Brendon, for not only just for today, but also just being of service regardless. And one thing that I want to make sure that one thing that you've taught me is when you do reach out to your insurance providers, you reach out for a consultation perspective, not just a transactional perspective. So ask as many questions as you can. No one knows everything. Hopefully your practitioners also asking questions too. So I want to thank everybody for their time, sending in your questions. And my name is Cavanaugh Nweze. We try to do this every first Friday. So hopefully you all will join us again. Brendon, thank you. Thank you to all who attended today.
Thank you.
Everybody have a great weekend. Have a great Labor Day weekend. Be safe. Enjoy yourselves. Enjoy your family. And hopefully we'll see you soon.
All right, everybody. Y'all take care.
All right, now. Bye-bye.